Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, February the 3rd, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up for what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. Wave one destination's over. We're working on a 2 correction. Do we get down to 80? Do we stop a little bit lower? Was this recent swing point low the end and we're ready to go breaking out? Or are we going to get one more flush lower? We've been through this song and dance for several months now, talking about we knew we were going to 3+ years ago, we were going to get a big retracement in a wave two before then breaking out. And we said that ideally we could move all the way down to about 80, but at some point this wave two, right, Emil, would end. So ladies and gentlemen, somewhere this wave two is going to end and break out higher. So go back about 6 months ago, we had this low. We talked about it then. We said, likely we're not ending here. We're going to make a new low. Then a few months later, we got this new low. And then what did we talk about? This overlapping chopping action meant we were going to get another low. And since we got this new low, we said that based on this price, if we can stay below that 97 up here, that big battle zone, then we're likely still going to get another thrust lower. So let's look at that on the charting platform, and we can see what we're looking at here, the dollar index. And this does look like a wave one down, perfect 618 retracement of the prior high to low. Beautiful 618 retracement. Looks like that wave two. An impulsive move lower looks like wave three. And typically with this overlapping chopping action, you usually don't retrace in a 3-wave move. You're looking for a 5-wave terminal type of move followed by a big reversal. So is this bounce going to continue? It's possible this new low, we talked about it over here, so this was likely not the low. We did get a new low there, 3-wave correction, continuation down, and this move got a retracement, still stopped at this battle zone. And then we talked about that with all this overlapping, chopping, grinding type of correction that still looks correction, not a reversal. So we expected this would break down yet again. Kept talking about it. Here was our targets. We said we'll likely come visit that 96.60 area, and lo and behold, we did that perfectly. But notice this is a 3-wave look, so it does not look finished. It looks like we need another thrust lower to go down to these further targets, which would put us somewhere down here in the lower 90s, 92, 93. So I still don't think this bounce, we talked about it over here, this bounce is likely not breaking out. We're going to make a new low. This overlapping scenario we said was not likely to go breaking out. We'd make a new low. Now, is this third time the charm and this is the low? It's possible. I mean, it's not impossible to say that, well, there's no way this could be the low and we're going to go breaking out. In this crazy environment, anything is possible. But if this is the 1, the 2, and the 3, as long as we stay below this area, below this green box, we can be in, it's fine. As long as we start breaking back down, then we're likely going to make yet another new swing point low. And if this is the 1, 2, 3, 4, we're likely need to push lower to finish this move. Amen? So any questions? Is this going to break out? Anything's possible, but as long as we're below the Magic Fibo, likely we're going lower. And looking at this overlapping chopping action, and even after all that was said and done with a 3-wave correction to end it to the downside, that doesn't look complete either. So typically this is not the type of price action you see when we're talking a bottom reversal, that it ends in a 3-wave. Typically it's a terminus in a 5-wave type of move. And we would look then, well, do we then say we get this flush down here, ladies and gentlemen, what happens? Well, if we get another 3-wave correction, then it's probably going to gyrate again lower. But what if we get that 5-wave terminus down here? Then we get a beautiful 5-wave up, then a 3-wave correction, and another push higher. Then this looks like that wave 2 would be over and we're working on breaking out. So I'm here to guide you day by day, week by week, month by month, year after year, and how this is going to play out. So I would be extremely cautious in this area, thinking the dollar is going to go ripping higher just yet. It's possible, but even if it does, that's not a guarantee this is the end of that move. We still have to do what now? Big picture. Got to get above the Magic Fibo. That's a start. Then we have to get up and break this upper box up here somewhere around this 105 to 108 zone, 105, upper 107. That is the prior high to low 618786 zone. So this is still very strong resistance up here, even if we get above the Magic Fibo. But if we get above this 107, start pushing 108, then the writing's on the wall. We're probably going to go breaking out. And this wasn't the high there. That's a prior move. It's way over here. But if we start getting back in this zone and break above this box here, you can see we tested it multiple times. Failed, 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 even as we popped. Remember during this rally up toward that 110 zone, what did I say? I don't think this is a breakout. I think we're still going to go lower, and lo and behold, we got that. So is this over, or do we need more downside? And again, zooming in on the current price action, this definitely looks like we need more downside to finish this. So be extremely careful in this zone. As long as we're below this prior swing point, which is my green box up here, as long as we're below it, we're good to go another flush. So that is the plan. More than likely, we're going to get another flush, and my target's going to be down here at that 93.60 / maybe 92.50, somewhere between 92 and 93-ish, this zone, where I have my little bubble down here. So be careful. Just because we rally up, remember, if we hit 102 where the short squeeze is, then this thing would probably go popping, but it's not out of the question after all this chopping, overlapping, and push lower that we could even squeeze up here and still come down for new lows. So the dollar has a long way to prove itself, but I'm not convinced that this bounce is the one that's going to take us to break out to new highs. I still think we need another push lower. Then, like we've been doing for the last year plus, every time we get a new swing point low, we have to look at behavior. What does price action look like? This up, down, continuation, overlap, up, overlap, overlap, up, overlap, overlap. I kept screaming it, and it took, what, a few months. Started to bottom here in September, and then we started to rally up, finally ending in November, going into December. Then coming into this year, we dipped, and then we rallied early, only to come lower to make another low. So ultimately, we got what we were looking for. It took some time, so we're back in that boat again. So I'd be extremely cautious. If you took this bounce, I'd be definitely in a position of authority, taking aggressive profits, because the higher probability is still another flush lower. Because again, if this is the end of this down move, and ultimately that will happen, the wave two will end and you'll go breaking out, you typically don't end it in a three-wave correction. Got it? All righty. So what does that leave us with? Our currency pairs still hanging in there. We got the euro dollar. Nice pullback off the big run up. Beautiful pullback. Well, you would expect that. I mean, the dollar bounced, this thing goes down. The dollar drops, this thing's going to go up. We reached our initial targets, 118, 119.84, 120.41. Kept talking about it over and over, even after this pullback. When I say, Emil, hey, from that high to this low, we took out the 618 long time ago, back in December. That said, we were going to go up here. Highest of highest probability. And then we got this bigger correction to come back to the Magic Fibo. Look how important that Magic Fibo is. Beautiful. Bounced off of it, came back, retested it, ripped higher, came back, tested again before we finally got to these targets. Interesting how that played out. Well, why don't we think this is the end? It's possible that is the end. If the dollar goes breaking out to new highs, the euro is going to break down, no question. Inverse relationship. Why? The dollar index is made up of a basket of currencies. The most predominant currency in that basket is the euro dollar, the most commonly traded currency pair. Got it? So, why do we think we have more upside? Well, this picture is complete. We got to those extensions, and I warned you when we were up here, we're likely going to get another retracement off of this. Typically, that's what happens. So, why do we think there's potentially more upside? Well, you come a little further out, and you come back to this weekly prior move. And from this recent high back in July to the low, we still have this high probability here. We're going to go to 121, 123. But if that's not enough to get you where we need to be, check out this bigger move here on this top out of 123 down to the 0.95. And from this high to that low, we finally tested the 618, failed. Eventually, we broke above it. So we took out this 112.50 area. And then later, we took out the 117 area, which is the 618/786 off of that bigger move. And look at the targets up here, 127, 130.64. So up and until price proveth otherwise, there's no reason to believe the euro is not going to just keep this stair-stepping scenario where it reaches targets, it pulls back, it reaches targets, it pulls back. No reason to believe we still have a 75% chance we're going to 127. Well, we're in this boat not long ago, recently, with this 118, 119.84, 120.40 area, right? From that high to that low, we took out the 618. We did a nice retracement off of that before we could finally get there. But during this grinding portions, I said, look, when we close that candle body above 1750, we made a statement saying, yeah, go long till you get to 1984, 120.40, because when we did that candle body right there, it said 75%, we'd go to 119.84, 70 plus, we'd go to 120.40, and lo and behold, we got it. Amen? Done. So no reason to believe we're not in the realm of doing the same for this target. We already took the 618. We reconfirmed it, taking out the 786. We've been stair-stepping our way higher and higher toward these targets. So the longer term target is for the dollar to break down further and the euro dollar to continue to grind higher toward the 127, 130. Got it? So could that be the end and then we get the big correction? Sure. Maybe we fall shy of our 3+ year target where we said the dollar would go down to 80 area. If that still happens, then the euro is likely to go up to this 140, maybe 145 area. Beautiful. If not, and we fall a little shy, then maybe it's the 127 to 130 area that's over, and then we reverse. What is the bigger picture? Bigger picture, come back over here to my charting, and the bigger picture is this is what we're looking for this ultimate to play out. We bottom down here, we're looking for that A to go up to B and then come back down in C and likely come back to the lows and even make a new low below the 0.95. I said at this juncture 3+ years ago, the euro is expected to go much higher during the next several years. And then it was never that we were going to reverse and go breaking out all-time high. It was a reversal to then come back down even further. So if the dollar does reverse and go breaking above 114.72 and goes toward 120, etc., like the plan, then this is going to break some new lows down here. But I said it would take years to get up here, then probably years to get back down there, long-term picture. And so far, we got a beautiful move up, retracement to a 618. We broke out higher, and that's why we believe there's more upside still to come. Fair enough? But eventually it will end, and we're going to get another push lower. That's the inverse of what we've been talking about on this monthly chart here. All we're looking for is a wave 2 correction. Wherever it ends, we're going to do what? Go breaking new highs. So when the dollar does reverse and go breaking new highs, the euro is likely to go breaking new lows. That's the plan. And what about the pound dollar? Well, I still have this trade running, still up over 200+ pips. We took 400 pips, and I knew we were going to get a correction. That was the plan. The software was telling us we're kind of overbought. We need a little reprieve. My daily, my weekly, my monthly went overbought territory, so we looked for a little reprieve. And how much further do we go? That's why we took some profits up here and looking for this correction. Well, not only are we in a winning trade and bank profit, but we're still in a position of authority that if this thing just tanks and stops us out, it'll stop us out for additional profit. Fair enough? And remember, on-screen programming, that you can take your stop loss and move it deeper into profit. Notice we need 179 to stop loss, and we're up 236. That would lock in more profit. I'm not convinced that this is quite over yet. I think we're getting closer, but it's possible we could see this dip into the cloud area to bounce off of it. Maybe we get this daily cycle down over the next few days as we grind a little lower, and then we bounce to continue higher, shooting for that 127, 130 target. And again, what does that come from? That comes from the charting platform where we show these targets up here, 127, 130. So that's the plan. Get in a position of authority, let it play out. Worst thing that can happen, it'll reverse and pip us out for more profit, but we book profits in there. And the pound dollar is in the same boat. And that one, we were up, still up over 500 pips. We took profits at 586. And I suspect we're going to see more upside for the exact same reasons. And notice the monthly. You can go back in the archives back in 2022 when we bottomed. I made a bold statement, not a prediction. Everybody does a prediction, but I leave that to the prophets. And I made a bold statement. I can anticipate with the best of them, a God-given talent to read and interpret price on a chart. Amen to that. And we said that this would take multiple years and it would make thousands of pips that you might consider going long. No buy, sell, the whole recommendations. I cannot tell you what to do. That's not my job. I'm just reading and interpreting price, letting you know what I'm doing. And that was the plan. And we talked about it 3 years ago, and lo and behold, it played out. And I still don't think it's quite done yet. So you'll notice the pound, I have some further targets on the pound upside. And I still think we have probably another 1,000 pips to go. And then we could reassess, is that the end? But we go back in the archives, when I made that statement, I even drew the Picasso, paint the Picasso of what the software would look like. And I drew this. I said the monthly was going to cycle up, and then it would start slingshotting higher and higher and higher for us to get up to those targets. And that's exactly what we've been doing. So yet again, we took some profits. This is a winning trade. No matter what happens, this thing could crumble and drop below the swing point low in a day, which is unlikely. But if it did, worst case scenario, we already got profits and we're in a position to get more profits. And on this one, you see the profit up 500 pips and we move the stop loss in. I just want to give it some breathing room so that it doesn't dip, take us out of this trade, then rip up to these targets up here. Got to give it some breathing room on these higher time frames. Amen. So why are these targets? It's the same as we showed you on the euro, and that is you come over here to the pound dollar and we can see why. Short term, we talked about reaching 139. We got right just shy of it. So that's kind of the area. So we still have 139 to 140 area to finish. But the same rule, this prior high in June of 21 to the low in September of 22, we took out 127.50, which was the 618. We took out this 134.90 area, 133, 134 area, which is the 786. So what is the rule? When you have a move and then you close above the 618, way back here in 2023, we had a 75% chance we go and visit 147. And it took a while, right? We hit the zone, we pull back, we chop, we grind, we went up, we pull back. We're grinding, stair-stepping, and just working our way higher and higher, reaching the most recent targets. A little bit of a correction, that's understandable. And what? Until price proves otherwise, we still have a 75% chance we're going to 147 and a 70+% chance we're going to 152. And what does that match? That matches this right here. 142, 147. Well, I could push that to 152. But we got a lot of battle zones to get through these two. So could I raise this on-screen program? You just raise it up. You'll notice it's 150. You just do it again. You push it up, 152. And what if I want to go 152 exactly? Easiest way to do that is click on the line till you see these little squares. Then you right key click, go to trend line properties. And then you type in under parameters. You fix that to 152 even. And make the second one 152 even, if that's what you want. And then notice it'll pop it exactly to 152. Beautiful on-screen program. You talk about the AI, everything's AI. Well, this price AI gives us these targets with our technical analysis. So that's how I typically do it. I use my charting platform to use high, low, 618, 786 break, 1448 target, 1272. So these are extremely high probability targets. And yes, it could take months till we get up there. It could take a long time. Notice when we start correcting, this thing could go nowhere in a zone for years. We kind of topped out in August of 23, bottomed here in October 23, then slightly made a slighter high, but in the same zone into 24, back down into 25. And it's part of this stair step, but that's just typical price action. Amen. And what did the monthly do since this low? Went from oversold toward overbought, turned over slingshot, turned over slingshot. So eventually we're going to turn over and slingshot and keep going to get up here. No way we're going to get up here without that monthly continuing to push into overbought territory. And this monthly still has a little something left to go, pushing higher, pushing higher. So what happens when we turn back over? We're likely to maybe reach one of these targets. Maybe we get there and then we get a pullover where this turns over, slingshot higher to then continue with lows, highs, higher lows, higher highs, higher lows, higher highs. And remember, this is uptrend for now. Over the last several years, it's been an uptrend. But the bigger picture was a downtrend, and this is corrective in that. So eventually this thing will top out and it should start moving back down toward these lows again. Got it? All right. So there you have it. Let's continue. What about the euro yen? Still expect more than likely when we get a market crash. Elizabeth, I'm coming to join you, honey. We talked about getting into a position of authority on this. If we bounce and get pipped out, we've done this over and over. Makes hundreds of pips, get pipped out, make some pips, get pipped out, make some pips. This thing's likely going to end up topping and reversing. And is this the beginning? Well, two things we can look at the moment. From the recent high, let me stretch this out so we can get a lot of movement in here. From the recent high, use the 2-point tool, this one down here, 2-point tool, and you go from, and you can use your control key, so it's like a magnet, so it sticks to the high, to the low. This thing is chopping in here. As long as we remain below this zone, which is this 185 down to 185.70 down to about 185 area, 184.92, my 618.786. So what is this likely? This could be the initial move. Retracement fails in a continuation lower. If we start closing back above 185, 186 area, really more than likely this zone right there where we tested, failed before we did spike up, then come right back down. So is this likely going to fail and push lower? That's the plan. We have a monthly time frame overbought. We got a weekly time frame overbought. My daily starting to push lower, and that was the daily cycle down. Now it's starting to cycle up a little bit, and we're either going to slingshot lower or maybe we cycle up, cycle down. But as long as we remain below this, the bias is we're going to make a new swing point low. And look at where that swing point low is down here at 181. Got it? So we dropped 500 pips, got to a position of authority, and now we're retracing, and the probability this breaks out right now is very low, and the probability we get rejected and we break lower is much higher. Again, the soft technical picture says we're likely moving lower. A monthly's overbought, a weekly's overbought, the daily cycle down as the weekly started to turn, and then we're reversing at the moment. But I would, if you're scalping this to the upside, be in a position of authority, take aggressive profits, because the likelihood that we're going to go breaking out to 187, 188, 190 is extremely low. This move up to these extensions is extremely low. And as long as we remain below this zone, my pink box, the probability we break to a new low is very high. There you have it. And along with the dollar-based in pairs, like the yen-based pair, euro yen, the pound yen, same type of thing. This one's a little bit more aggressive. Are we going to get another push? Monthly's overbought, weekly's overbought. We've been doing this for months now. Get into a position of authority, make hundreds of pips, get pipped out. Position of authority, get pipped out. So are we going to do the same? We're testing that same high to low, 618786 zone. If we cannot go breaking above this level up here and we stay below it, all roads lead to a high, low, lower high, lower low. Well, if we close above this 214 area, then we can start targeting 215, 216. So this is what we do. We get into a position of authority. You take your profits, and if it does pip you out for more profit, great. What happens if this thing goes breaking out up here? I'm going to short it down again, because eventually that monthly, weekly are going to play out, and we're going to get a massive rejection. Then we talk about this so many times. In any financial crisis, what has the yen done? The yen has strengthened during these periods. Dot-com bubble burst dropped 9,000 pips. 2007 financial crisis dropped 13,000 pips. And this was back during 2015, got a big pullback into 2016. Thousands of pips. What do all these have in common? Every one of these highs have what in common? Monthly overbought, weekly overbought, daily overbought, needing depressurization. Did it again. Tied in with the financial crisis. And what do we have on these lows? Same thing. Monthly oversold, weekly oversold, daily oversold. So this is what I call salivate country. When I get my monthly, weeklies, and dailies at extremes, whether they're oversold or overbought, I look for buying opportunities on bounces and selling opportunities to the downside. And at some point, after our rip markets that just keep going higher and higher, we're going to get another financial crisis. Pay me now, pay me later, it's going to come. So what's the likelihood we get another financial crisis? I would say extremely high. And just part of the years and the cycles, they eventually come in a big way. So when it does happen, we can use this as a guide that the pound yen is going to drop thousands of pips. Amen? So do we get into a kind of financial crisis in 2026? There's some predictive models. Remember, I don't predict, I anticipate, but there are predictive models out there that says, yeah, 2026, maybe 27, it's coming sooner than later, but no later than later. And we had this big run. Well, remember, I was the biggest proponent back here during COVID. I made a bold statement as well. During COVID, I said this, and it's in the archive, that we were going to get this to run about 8 to 10,000 pips, and it would take years to run up there. But I said we were due to come back to this prior high and make new highs. We've done it. So now I shift gears from going long for years to potentially short for years. And we need some sort of retracement on this. Well, Emil, James, Ian, Mr. Tucson, Alan, what if we just get a 618 retracement off of this? So let's pound yen's in an uptrend, and we just simply get a retracement. So from that low up to the current high, we simply get a 618 retracement. That would put us down here at the Magic Fibo and we retrace to this 158. That's thousands of pips lower, right? So you can see why I'm looking for some sort of big move. And if we do get the financial crisis during this correction, it could extend to what? Maybe we split the difference. We went at 9,000 here, 13,000. What if we split the difference and do 11,000? That would put us about a huge move much lower, right? Thousands of pips more to get down there, around 100. That would be something interesting. So, in closing, still think there's more downside to this? Yes, this thing might keep grinding a little bit more. It's hard to call a top because they kind of grind and you think, well, that's it. Nope. That's it. Nope. And eventually you get this high, low, lower, high, and you start working your way down. So is this the final pitch? Was this latest price action here the end? And we're starting to get this struggling area, and then we start breaking down? Pay me now, pay me later, but sooner than later, I do think with a monthly overbought, weekly overbought, daily kind of cycling and turning back up, we're going to get more downside, one way or the other. And if that's not enough with the idea, market crashes, what they've done, look at this recent price action over the last few weeks. Ever since we hit this high in July of 24, we had the carry trade unwind. And what has price action been doing since then? Up, down, up, overlap, overlap, up, overlap, overlap. So this is not conducive to what? An impulsive correction in an uptrend. If that's the case, that could have been a bottom reversal, but you typically don't see a lot of this chopping, overlapping, grinding, grunting, laboring type of moves. And even after this grind higher here, this looks more like a wave. If you're a big bull, component of this, that's the A. All this chopping and overlapping is the expanded flat B. And that means we should come down in a C that's somewhere between maybe that 185 and 180 low. The C wave should, since it's an expanded flat, what does that mean? We made a new high off of that. And if this plays out, we should come somewhere down to at least a 185, 180. And that's well over 2,000 plus pips, right? So be careful. Even though this might grind a little bit more, it's in the parameters of an ABC correction. And what if during this correction we hit and we do that 618 retracement, which is down here about 158 right there? That's still thousands more pips. And what if just during this period of time while we're correcting, we get a market crash? Elizabeth, I'm coming to join you, honey, does manifest. Then this thing could go plummeting thousands of pips more. So my plan, again, not telling you what to do, but my plan is to get to these short positions and they get to a position of authority. Put your battle armor on. Because, back when we hit this grinding into here, we knew since 2020, this thing was going to grind and make new highs. We were looking for this. But this type of price action was very impulsive, and this is corrective off of that. So we still need another flush down. So I won't say I guarantee, Mr. Tucson, there's no way we can go breaking out, make yet another new high. I'm just not willing to go long and expect this thing's going to go up thousands and thousands and thousands of pips higher when a monthly's overbought, a weekly's overbought, and a daily's overbought. I'm looking for that corrective action. Tie in all this behavior, says correction, and then the idea that we might get this, Elizabeth, I'm coming to join you, honey. Yeah, look out. Amen. So if you're buying this bounce off of that, that's fine, but be in a position of authority because we certainly could see this thing go ripping lower. And that's the plan. I short it, get to a position of authority, let it play out. If I get pipped out, next go around, the daily tops and reverses back down, I'll sell it again. And if it does it again, I'll keep going because eventually we're going to get a big one. And if it ties in with the next financial crisis, it's going to be massive. Amen. All righty. Let's continue. What about the markets? What are we doing here? What about the markets? Well, first off, let's take a little venture to what we've been discussing. We said we kind of had a trade plan last week for Meta and Tesla earnings, and we're going to go over those in a minute. What we looking for these two to do in the future, I think Meta is going to go higher, got a target of 1,100 to 1,300. Tesla, I think, is going up at least into the 550 to 650 range and could easily blow doors to 700 and higher if one thing happens. If they tie in a little SpaceX with Tesla, a little piece of that, or they fold into each other, any of this could happen. This thing would go soaring higher. So that announcement that maybe all Tesla shareholders get a piece of the SpaceX pie, it'll go 700 lickety split. But anyway, I digress, but we'll go over that. And then here, expect markets to retrace before hitting all-time highs. We did dip. The question is this going to go break out to all-time high, or we need still another correction? Amen. Now we said the dollar index expect to continue the downtrend. We got that move. So far we kind of treading along beautifully in a position of authority on these moves. So Mr. Tucson, where does that leave us with ES? ES, we got the dip. And every time we seem, as of late, to dip, the bulls step in and buy. Dip, step in, dip, step in, dip, step in, dip, step in. But notice, we're struggling at these premier levels. We did make an all-time high, I think it was last Wednesday. Very briefly, got a correction, and then we got a little move and we bottomed. Is this likely we're going to go breaking out to the 7,068, 7,096, 71? I definitely think we're going to get up here. The question is, do we need a bigger retracement? Is this part, this looks like that maybe needs further downside. All I can say is if we get it and we see the market sell off again and we come down here to the Magic Fibo to bounce, then this is a great opportunity to get to your position of authority as we buy the dip and look for this thing to go breaking out. I'm just not convinced that this move, even though we pull back in doing it, that we're going to get up here first before we take a dip. I still think we need a bigger correction. We did get some along the way when we've been talking about it, but I was expecting deeper. And this is, again, overlapping. This doesn't look like a terminus where we're ready. Is this the 1, 2, 3 wave up, 1, 2, 3 correction? As you drill down, let me do it at a lower time frame. You can see what I'm talking about. So, ladies and gentlemen, this still looks corrective. Not like we're ready to go blasting off to new highs right now, all-time high, that we may need to correct even further. So this move here looked more 3-wave. This looks 3-wave. This looks more 3-waving. So what is that? A 1, 2, 3, 4. This is overlapping. If you look at that as a 1, 2, 3, 4, overlap, overlap. So that's still corrective. But from the bigger picture, that looks 3-wave, 3-wave, 3-wave. And even on this up move, do we need maybe one more 3-wave in here? We come down, we go back up, then we get the bigger correction. Just be aggressively taking profits. If you short ES and you're a day trader, be sure you aggressively take profits on the shorts and be aggressively taking profits on the long. Last week we talked about that. We were way up, and I said, be sure you take aggressive out. And the buyer started stepping in, and that wiped out that big short, and we're still grinding. But this price action looks still corrective, and likely we need another thrust to a new swing point low. And by getting a new swing point low, that would kind of clear up all of this latest chop, right? All of this chopping, overlapping needs one more thrust lower. So is this the A, this the B, and we need this last push lower to finish this move before we reverse and go breaking out. Amen? So be careful. Long or short, however you're trading it, be in a position of authority and take aggressive profit, because I'm not looking for this thing, and it could be very quick. It could be like one of these the other day. We kind of rallied to a lower high, and then we got this wham. Matter of a couple of days later, from the 15th to the 21st, a few days later, got a weekend in there, we just whipped lower. Well, we're kind of reiterating that same thing over here. We got a new high and we got a correction, and then we look at that. Same thing here. And now we're still at a lower high and we're pushing lower. Corrective, corrective, corrective. Not conducive to the blow off top just yet. Likely need more to the downside. Just be in a position of authority on these, because this thing, every time it dips, the bulls want to start buying. They can't break out. The sellers come back in. The bulls, sellers, it's a battle. That's why you take aggressive profits. What about NASDAQ? NASDAQ has been way more bearish than ES. ES did go on to break all-time highs, but check out NASDAQ from the higher time frame. Let me zoom this in now. We haven't hit all-time highs on the NASDAQ since last October. AS has been grinding, chopping, and we thought we were going to break the new highs, and we missed it. That's still at a lower high. Is this what needs to play out here? Is this the A, this chopping, overlapping B, and we need one more push down in C? Be careful. I think at least we need to come down as test the Magic Fibo here. And maybe if this is the ABC, then we come back near the prior low, could put us down here in 23, maybe upper 22,000 area. Any questions? So again, you're shorting this, be in a position of authority. Either way, you're buying the dip and it's rallying, be in a position of authority. You're selling the rally and think it's going to dip more, be in a position. Because this is going to chop. I said that weeks back. Expect the markets to be choppy, so be in aggressive TAP, take aggressive profit mode, no matter how you're trading it. And for the last multiple months, spot on. Big swings in here, but spot on. And this bigger picture, high, low, even though we thought we were going to break out, we've been at lower highs, look for correction, look for correction, look for correction, look for correction, even as we falsely tried to break out. And this is still at a lower high. Now, if you zoom in, let's go like to a 4-hour and look at where we reached and where we're being rejected from. So I'm going to remove some of these lines just so you can focus on what I'm looking at. And we can see from the low up to the high, we kind of broke the 618, dipped down to a 786. See, we broke both of those right there. Amen. That recent low to high came down 618, 786. We took them both out. Physical candle body close. We have a 75% chance we're going to go visit 24.8, 24.6, 70 plus. And lo and behold, from the recent high to low, where did we bog down? Recent high, and again, you can use your control key, use it as a magnet. From the high down to the low, we retraced right to that 618 zone and failed. So this price action from this low to that high, that correction last week said what? Likely go and make a new low. And then this recent high to low bounce coming in this week says we bogged down right in the danger zone and we're turning down. So we're kind of stuck between support and resistance right now. Support of what? We got resistance up here, the 618786, and we got support where we're testing of the, and you can run these all day long, from this low, most recent move up to the current high. We're testing the 618786 on this prior move. So we have support, we have resistance. Which one's going to play out? This bigger price action suggests we need a new swing point low. Amen? So be extremely careful. Again, if you're shorting and you think this is going to play out, be in a position of authority, because this thing could go bouncing back up and fail just to pip you out, just as then the drop. So I'm still looking for this corrective action needs further clarity. Is it possible we could go breaking out? The bigger picture, yeah. The bigger picture is we're going to 26.7, 27,000. That's this bigger picture, high to low, and we broke the 618786 to the upside. So we do, in fact, Mr. Tucson and others have a 75% chance we're going to this 26.7, and a 70 plus we're going to 27,000. But this recent overlapping price action suggests we probably need another little swing point low in here before we then go breaking out. So force price to prove itself. Until we take out this zone, which we tested and got rejected from so far, till we get above that 26,000, that sets the tone we're going higher. Up and until then, we're likely going to make a new swing point low. And who's in the way down here? This bubble right there, that's the daily Magic Fibo. See it right there? So let me zoom in. That's the daily Magic Fibo sitting there. So I would not be the least bit surprised. This high, that low, bogged down 618, we go to the extension, and who's looming in the ballpark? Magic Fibo. Would not be surprised to see us flush down here, then bounce to get up. What's the probability we make that 26,700, 27,000 target? Extremely high probability. This target up here, extremely high probability. But this overlapping chopping action suggests we need to clean this up, make a new swing point low before we probably have enough oomph to get up here. If I'm wrong, that's a rare occasion. No, I'm just kidding. Nobody gets it right 100% of the time. But if we start closing back above that swing point up here at 26,000 battle zone, then game on to get to that bubble. Otherwise, we start to close, and the bigger picture says from that low to that high, we're likely coming down here, 24.8, 24.6, and look who's looming at 24.6. Magic Fibo. Top side of the Magic Fibo, lower side is 24.3 area, so it's sloping upward. So even as we chop and grind, we could grind lower while this is sloping upwards each day, and maybe we intersect before we can get up there. So everybody good. Definitely think we're going bubble hunting, 26.7, 27,000, and could even go higher than that, but certainly we're going to get to here. The question is, Are we going to go breaking out now, or we need another push to make a new swing point low to set it up? I'm leaning more toward pushing lower before we get up there. And again, if it's turns out it's the opposite, then when we start closing back above 26,000, that's a key to go long, shooting for short term 26.5, 26.6, 27, which ties in with the bigger move over here, 26.7, 27. Everybody good? So all this bouncing, chopping, overlapping action looks like it needs one more thrust lower before we get up there. And Emil, what if this is the bigger move off of that correction? What if that's the A? This is all corrective, and it's a lot of overlapping. Certainly looks it to me. And this is the B. And now we're working on stair-stepping lower. And we could push this down even to a new swing point low below here at 23.8 area. 23.9 is the low. We get below that. Maybe we need that new low before we get up here. Worst case scenario, we get this. Salivate to go long because it's that much further to get up there. Otherwise, we may just need to get to the daily Magic Fibo and retest from the low to the high, beautiful 618,786 zone to bounce off of that. And this would be the combo meal, right? You get a up move, retracement 618 that ties in with the Magic Fibo. We call that the combo meal. And this sets up big move higher. We start targeting 1618, which again is back to my 27,000 target. So the further we dip, the more I want to buy. And I don't mean intraday was down 200 points, let's buy right now. Yeah, we're going up here, but all this corrective action suggests we need more downside. And it would not surprise me to see us dip down here to bounce and get up there, or even dip a little further to break this swing point low. If that's the A, and this corrective is the B, we come down in C, then we go up. All roads lead to this bubble up here. We could break above 26 and go there now. We could retrace the daily Magic Fibo and bounce to get there, or we could have that bigger A, B, C and break below 23.9, bringing us into the 23, maybe 22 area down here to then bounce and go up. But all roads, highest of highest probability, lead us to here. Got it? All righty. So if we do get the bigger retracement down here, I would be a buyer on that bounce off the Magic Fibo. And what if it just does a bigger move here and we get down here, make a new low below that swing point, this swing point, and then we retrace and still flush lower. We bounce off the Magic Fibo and we finally get the low down here. I'm buying here, I'm buying there, I'm buying here. And eventually, whether we bounce from here to get up there, or we bounce from there to get up there, or we do ultimately pay and make a new low below this 23.9, then I'm really salivating because that's a huge move, thousands of pips higher, points higher to get to that bubble. Russell, still think the Russell is likely to push on toward 31,000. 3,100 zone. That's kind of the plan. So do we need this corrective action, get a bigger correction first, then we get up there, or do we start breaking out now? But I definitely think we're going to make a run toward that 3,000 target. The question is, do we need this to give us a bigger correction first to get up there? Kind of like all of them. ES gives us a bigger correction, still think we can get a blow off top. NASDAQ gives us bigger correction, still going to get a blow off top. Russell, still going to get a blow off top, and the next target is that 3,000 zone, 3,000, 3,100. Any questions on that? So you look at IWM, you can look at the Russell, all's in the same boat. And be careful where we are in this bounce off of this pullback. We talked about it over here. We said our 266, 265 confluence of event, extremely high probability. We reached and exceeded it by a few points, and now we're pulling back. I'm not convinced that this little pullback is ready to go breaking out higher. We may need a bigger correction first to then get up there. So be in a position of authority on this. What's the likelihood we push IWM, if that's how you're trading, up toward that 290, maybe 300 area? Extremely high probability. The probability we get up to here, extremely high. The question is, do we need a bigger correction first before we get up there? So still a little iffy that we're ready to go breaking out. No ifs about it. Definitely think we're going up toward that 290, 300 target up here. So I can put my bubble up here. That's kind of the plan. We get 290. Let me pull this down just a touch. A little bit too high. At 290, 300 range. So somewhere like that. And I'll shrink that up. There we go. So what's the likelihood we go bubble hunting? Extremely high. Right, Harold? That's where we're headed. Ladies and gentlemen, in my humble opinion, no question, I think small caps are going to get up here. The only question is, do we need this bigger retracement first? The bigger the dip, the more I salivate because this is extremely high probability target. And if you drill down on this latest move, like to an hourly chart, we have a high, we have a low. Is this the 1 hour Magic Fibo bounce and we're ready to go up? Or do we need one more thrust lower? Well, you use the same little tool. You come up here, you go from the high down to the low. And as long as we're below the 618786 zone up here, I'll go ahead and remove this one. This was the initial target, and we're already there, and we're surpassed it a little bit. We got a new bubble further up the food chain up here where we're headed. So rinse and repeat. But as long as we're stuck below this 268, 266 zone, major resistance up here. So Harold, is this the A, the B, and the C? Then we go bubble hunting up there? Or do we start to close above 268? Kind of that swing point right there. We close above that, then by all means, we can be targeting 270, 275, 280 en route to what? 290, 300. So if I had to guess, this looks like we probably need one more push lower. And notice since this move, another thing that's interesting, overlapping. So, and we're failing below. So as long as we're below this box, expect more downside. We break above this box, then we could shoot for the upside. The likelihood we get up here to this new bubble, extremely high, like we did the past bubble we got there. Now here's the new bubble. What about Nikkei, our global liquidity? Is this the breakout zone? We broke out, we're retesting, and now we're ready to go up to 60,000 up there. Or do we need a bigger correction? And this concerns me a little bit as well, meaning we got this correction, and look at the overlap. Overlap, chop, 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 overlap, chop, 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 overlap, chop, 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 overlap. So we may need one more thrust lower to clean all this chopping, overlapping up before we can get up to our bubble up there. So all markets have bubbles to go to. And I definitely think they're extremely high probability we're going to get there. The question is, do we need to correct further first? So be in a position of authority on this. Be careful. Yes, we're stuck between support and resistance. Sound familiar? Kind of like on all these. And you drill down to these lower time frames. And what did we just do after reaching this target up here? From that high to that low, that's the extensions, and you're getting a pullback. Or are we pulling back to where we broke out from to break out, or we're going to correct even further? So this recent high to low went right to what? 1448, 1272, like clockwork. Now we're correcting. And typically after you reach those extensions, what do? You come back to where you broke out from to potentially bounce and go there, or you come back to the Magic Fibo. So what's the resistance up here? This zone where we touched. And so we got resistance up here. And now we have this new, and we continue to rinse and repeat on this. I got to take my line off so I can do this next scale. From that low to this high, we have support down here, 618786, and we just reached this extension, so likely we're going to need, maybe it's this. Maybe this is the low, this is the high. We get a 618 retracement to bounce and continue this, or we break down further because of all this overlapping chopping, and we need a new swing point low. I'm still saying be careful. And as long as we don't hold this level and we get below the Magic Fibo on the 1 hour chart, go back to the daily, and you can see what this looks like. We may need to correct, come back to where we broke out from to bounce to get there, or we could even get a deeper retracement if this is the bigger A, chopping, overlapping B, and we get the C, come back to the Magic Fibo to bounce and go higher. But this target, like all of them, ES going higher, extremely high probability. NASDAQ going to that 26,700, 27,000, extremely high probability. IWM going to, IWM's 290, 300, extremely high probability. Nikkei getting up here to 58, 60,000, extremely high probability. Question is this still corrective? We need a bigger correction first. Again, all I can say is I can't say it's definitely going to happen, but if it does, what's the mechanism? Look for this thing to bounce and go ripping. But even more so, if we get this bigger correction, then it's going to take our markets down with it. I do not see the Nikkei as global liquidity to go dropping thousands of points. It's going to pull ES down. It's going to pull NASDAQ down, likely even going to pull the Russell down with it. And maybe that's what we need, a bigger correction before we get the blow off top. Fair enough? All righty then. So let's continue. What about our Tesla and Meta? Talked about that last week. Tesla is likely, well, that's Meta. Let me do Tesla first. Tesla is likely to come down and test this Magic Fibo. I was looking for this, Emil. Others looking for this to come down here to bounce and go higher. And we're just kind of chopping right now. So I would not be surprised to see us come down here to bounce, or even a little bit deeper retracement to bounce. But all roads lead to Mr. Tesla shooting up to that 550, 650 is extremely high probability. And what if they make an announcement that they'll have access to SpaceX? This thing will shoot to 700, like lickety split. So this thing could go on a major rip. So what do? I own TSLL. If we get a bigger dip, I'm just going to add some more to my position. We've been using TSLL as a leverage product. When it got down here into $6, loaded up, we got almost a quadruple here back in October of 24. We talked about it when it was below $10. Tesla was going to run toward 500. It made its run. This baby went from below 10 to 41.50. Took profits on the next pullback. Nibbled here, nibbled, gobbled, had a smorgasbord down here. So I'm still in it to win it. And even on the latest push, I took some more profit. And I'm looking to, if we get a big dip and the markets do the bigger dip, and this baby dips down in maybe $12 range or whatever, I'm going to add more to position because I'm still looking for at least a triple. If we get down to 12, we should get in the mid 30s if it's going to be a shoo-shoo, a dud. And if Tesla does go ripping past 700 toward 800 or 900, this thing should go into the 40s, maybe even 50s up here. And that could be from 12 bucks. That could be a 5x, get near 60. I like it. So I still own these, no buy, sell to hold. I still own them. I've been buying, taking profits, markets money, buying, taking profits, markets money. So we're on the house's money to go much higher, and that's the plan. Amen? So don't be shy in that we're probably going to go lower. And if we get the bigger correction where the Nikkei goes pulling back further, then it's going to pull our markets down. And I suspect it's probably going to pull this down with it. But this is clearly set up a long time ago for us to get up to that 550, 650. And that could be a conservative target, but it's a highest of highest probability target. Are we going to get there? You betcha. In my humble opinion, we're definitely going to get there. Question is, do we exceed and go up to 8, 9? We get up to that 8, 9, that TSLL is going to push past the 30s, probably into the 40s or even 50s. We shall see. But that's why I do this. Meta, these moves have been beautiful. This big correction, and we got the 618 bounce, another 618 bounce. We broke out. So this move, this pullback, bounce, pullback, bounce, this sets up us to go up to the bigger picture is my 1100 to 1300. So this is where I think Mr. Meta is definitely headed. It may take a year or two-ish to get up there. Could be sooner, could be slower, but I definitely think it's going there. So I own shares of METU. Bought some way down here, up in profit when the earnings came out, got a beautiful pop, took a little profits. I'm looking for this to backfill this gap. So the probability that this continues lower into this gap fill to potentially go higher from there, definitely think it's possible. Or Emil, maybe we're starting to do a 1, 2, 1, 2, 1, 2, and we do this again, and we take the low, which will be a little bit lower, that low up to the current high, and we get that 618786 retracement, and we set up a 1, 2, 1, 2, 1, 2, and that would be beautiful, 3 of 3 of 3 going higher. And that's exactly how we can get up here to the 1100, 1300. So just like everything else, what is this bubble up here for? Because it's extremely high probability target. And I'm willing to buy shares of this, and you get dividends while you own it, right? Our next dividend will be in March. You go back here. That was March of last year. We got a little dividend there. And then every quarter, it seems like you get another one, June, and then September, and then December, we got 2. Interesting how you get 2 in December, right? You typically get 2 of these in December. Well, we shall see. And what if it takes a year or so to get there? Then we'll collect some dividends along the way as this thing grinds higher and higher and higher. And how far can we go? We shall see. But if Meta gets to that 1100, 1300, this thing has the ability to get up here in the 50s, 60s, and could even go into the 80s. We shall see. Any questions? So again, I can't tell you what to do. That's my plan of action. And so far, so good. Bought at these lows, went higher. Now I expect this gap fill and then probably bounce from there. But the plan is, even if this thing in the market's all tank and we get the much bigger correction, if I see my METU shares dip into the low 20s, I'm backing the truck up for the long term. What's long term? Next year or two. Got it? So I expect this thing to go ripping higher as Meta is expected, highest probability to run toward that 1100, 1300 target way up here. That's the plan. Could take a year, could take two-ish, but that's still the plan. And I'm going to capitalize by using the leveraged METU shares. Fair enough? All righty. So what's the likelihood we get this little pullback or Tesla dips maybe down here or even more? That's fine because it fits the mojo of our bigger picture on the market. If ES gives us that bigger correction, great. We still got a bubble to go way higher to. And what if NASDAQ does it? We get the bigger correction or even into the 23s down here. Got to go that much higher on the rip higher. So as all these expect to go bubble hunting, that fits in with Meta's bubble up at 11 to 1300 range. And I think all of those will come to pass. Question is, do we get that bigger correction first? And how big? The bigger the correction, the more I like it to go that much higher. Amazon also setting up for the 265, 270 target, highest probability. Why? From the recent high to the low, we bounced, took the 618 out, so we have a 75% chance we're going to 265, 70 plus we're going to 270, and we're just kind of chopping in the zone. Do we dip down here to bounce again? But there's a high probability, so I think AMZU is going to go up higher as that does as well. And the big picture for Amazon is look at this growth curve. You get pullbacks, but we've just been grinding higher. So where do you think Amazon's going to be in the future? A year or two? 300? Pushing maybe 400? We shall see. But that is the plan. For the recent high to low pullback, we did reach those extensions. The recent high to low, we did reach the most recent extensions, right? So we rinse and repeat this thing over and over. From this recent high to low, we reached our target. And I still think on this latest correction, we still have more targets at 265, 270, followed by basically 285, 295. Onward and upward we go. But you can see the extension. I do think we're going to stair step in here. If we get Elizabeth, I'm coming to join you, honey, then I'm really going to load up on these things. But until then, don't think we're going to see the big market crash until after we see these ES get to those bubble, NASDAQ get to the bubble, Amazon get higher highs along that bubble run, et cetera, et cetera. Netflix, be careful. Still breaking down. Kind of warned you about after that big run, this parabolic move. We were due for a much bigger retracement. Still think there's more downside in this, so be extremely careful. And I do think we're going to get a bounce eventually, but this could be visiting into the 60s. We're breaking back below the Magic Fibo. We're probably going to continue to decline toward the 60s over here. where was the prior breakout, correction, then we tested it, retested, broke above, retested before it broke out. Typically, you come back to this area to maybe go higher. And if we don't hold that, then it pushes us down into this 30-40 range up in this area. So be careful. Definitely think there's more downside with Mr. Netflix. Now, let's go to black gold Texas T. We're stuck between what? Support and resistance. Who could have guessed? Who could have thought? Who could have anticipated we're stuck between support and resistance? We went up. This is a 3-day. Almost tested the Magic Fibo. But when we were talking about this last week in bullish run, I said if we get above 66 and hold it, then we could likely break this trending line, and we come back and we failed it. Well, this is extremely strong resistance up here. This box is extremely, I can stretch it out. That's extremely strong resistance up there. Why? It incorporates this downtrend of lower high downtrend that's been here for years. So all the way, it's been here for years, since 23. Lower highs, lower highs, lower highs, lower highs. And we tried to break it. So it's like the 7th time. 1, 2, 3, 4, 5. And we're testing it now. There was one there, 6, 7. So no reason to believe this thing's ready to go blasting off to 100 just yet. I do think that's in the cards. We probably need one more flush. So be extremely careful on this. What is the plan? We flush down to 50 and lower. I'm instantly buying some UCO. Boom! I'm going to load up on some UCO when oil prices, if it ever gets to my 50 and lower target. Right? That is the plan. So black gold Texas T is now stuck between the Magic Fibo on the daily chart, which is support, and then the resistance has the downtrending lower high trend, lower high trend line, and that 66 target up there. Kind of warned you to probably test that and get rejected. So far, so good. And we're stuck between resistance up here, trend line resistance, and support of our Magic Fibo. So I would not bet against this thing ripping higher just now. It kind of sucks you in and then it wipes you out, right? And it's been doing that 7 times where thought it was the breakout, especially this guy over here. Rockets went off in the Middle East. Woo, it's going to break out. It's going. Boom. Sucked you down. And then look at it over and over, Harold. We're breaking out. Yeah. Look, 1, 2, 3, 4, 5, 6, 7. Breaking out. No. Breaking out. No. Breaking out. No. These really head faked you. Ooh, it's above it. It's definitely breaking out. No. That one. Breaking out. No. This one. Breaking out. Well, is the 8th time the charm and it does break out, or likely needs flush, but all of this chopping, overlapping still looks like it needs one more flush lower. So I have a game plan. Whether or not I execute it, price will tell. If we dip down to 50 and lower, definitely executing. So be careful up here. As long as we're below 66, a lot of bearish potential to go lower. And all this chopping, overlapping, you'd say, well, Gary, was this last low, and we got a low, a high, higher low, we overlapped, and now we're doing what? Overlapping. So this looks like the dollar index, overlap, overlap, even though it's grinding higher, still overlapping, still looks like we need to flush. So what's the plan? Set an alert at 50 and lower. If black gold Texas T is at 50 and lower, somewhere in low 50s to upper 40s, that's the bubble. And if we're down at 50 and lower, my goal and plan is to just instantly buy some UCO, which is the leverage product. And as this goes ripping much higher, then we're likely going to see that UCO rip much higher ×2. So I have some resting orders at 16, 15, 13, 14. I'm just looking to buy more and more shares. The deeper it retraces, the more I buy for the big run. Is this the end? Maybe. Maybe that's the end. And we're already going blasting off. But until we clear the hurdle, which is this lower downtrending lower high line and 66 battle zone up here, that leaves a lot more pressure to the downside. Amen? So if we end up starting closing back below the Magic Fibo, it sets the tone we're going lower low. So I would be very cautious. If you're trying to buy this bounce in expectation this is breaking out, definitely think we're going up here at some point, but I still think we need to finish business to the downside. And that's when I get real excited. So what if, William Bruce, we actually get down here, that salivate country, to buy UCO and look for this thing to go ripping higher and that to take it with it ×2. Okay? All righty. So Dan, be careful. Kind of said when you take your profits, we're going to take up here, take profit, and we're stuck between this big resistance zone and we got a little support zone, but once we start breaking below the Magic Fibo, it starts saying we're going lower low. Amen? So we take back below, say, 58. That's kind of writings on the wall. We're going to 50s. Low 50s, upper 40s. Gold. How about gold? Be careful with this. What did I say? And I blew in the face. Gold needs, that was like a $500 move lower in one day. Was that last Friday? One day, my friends. Stay thirsty, my friend. I warned you that at one point, one of these rips higher was going to be the one that needed a correction. And this looks pretty impulsive lower. So I would not be surprised, be extremely careful from that high to this low. We kind of grind back to the 618786 zone and fail. Any questions? So this zone up here is going to be some, again, major resistance. So could this be this? Retrace, fail, and come down to the Magic Fibo. Still looking for it. I've been looking for that Magic Fibo to come into play for many months. And we didn't get it here. We didn't get it over here. Even this one, I thought we'd go deeper. The crazy train started going. The gold train is going forever and ever. And what did I warn you? The more parabolic it gets, look where it dipped back to. This latest parabolic move, arrow right there, boom, straight up, almost every day, straight up. It came back where? To where we started from. And I'm not convinced that this high to that low with that impulsive move is ready to go breaking out. Yes, I think it's going to go higher in the longer term, but the shorter term, we're probably going to fizzle in this area and get another push lower. Amen? And what about silver? Look at that. Holy moly. Guacamole right there. Look at that. Emil, what happened? Warned you. Silver train ripping higher. We need a correction. And check out what happened. From that high to this low, 41% correction. Wow, that's pretty impressive, isn't it? In a matter of a couple of days, couple of 2-3 days. Ouch. The wheels fell off. Is this over? Would not be surprised to see this rally a little bit more and do the same type of thing. That looked very impulsive, so we probably need A, B, C before we then go breaking new highs. So stretch this out, use your 2-point tool, and we go up from the high. Let me get my little control key. From the high down to the low, we got the 618786 zone up here. Big time of major resistance. Everybody good? So we don't have to get up here to get rejected. This just looks way too impulsive to be the dip in which we're ready to go breaking out to new highs. I think we need another push lower. Amen. I warned you, when this thing starts going parabolic, the more it's going to go at least 50%. And we did 42, and I don't think it's over. So this rally should be very cautiously, if you're in this, I'd be taking extremely aggressive profits, because I suspect, Harold, this thing is going to fizzle manizzle and give us another push lower. Who could have guessed? Who could have thought? Who could have anticipated we were due for that? And how many weeks have I been warning you? Go back to the beginning of 2025. I said silver is the most underperforming asset out there. This thing is due to go ripping getting into 2025. Look at it. It did what we said. I even sat boldly saying, we're going to 60, 70. Guarantee. There are no guarantees, but I guarantee it's going to 60, 70. Boom. And then I warned you as we started with more parabolic, we need at least a 50% retracement. And I don't think this 42 is the end yet. So that rally should fizzle, in my humble opinion, and we're going to get another push lower. Because again, just looking at price action, where is the 3-wave correction in this? That's just 3 daily candles lower. You go to like a 4-hour. So there's not much correction in that. That's pretty straight down. Amen? If anything, it looks more like a 5-wave. 1, 2, 3, 4, 5. And what do we know about corrective action? That 5-wave is very, very likely the A. This is going to grind into a B somewhere, maybe into that resistance zone, 618786, and then we get the C back down. But this impulsive move lower is not conducive to this thing breaking out right now. We need a 3-wave correction to set the tone. We're going higher. So how much lower? You can use your 3-point tool on that. Let me go back to the daily. Stretch this out. Move this over. So how much lower can we go? Magic Fibo sitting down there. So let me take this out of the way. We know it was basically a 42% decline already, and I don't think it's done. But if you use a 3-point tool and you say, okay, from the high to the low to the lower high, we don't have to get up to this 102 area, but let's just kind of split the difference. I'm gonna have to take that off so I can put it up there. So say we go make a run back toward 100, that could put us down here in $44, $40 range. Huh? That's in half of where we are now. Sounds insane, but it's not. I would say at least the Magic Fibo is 50, upper 50s, maybe 60. So again, be careful on this bounce. Yes, we might go a little higher, but I still think it's going to make another low because that looks too impulsive to be the reversal to break out, that this should stop and fizzle and give us another swing point low. So I don't think this 71 low is the end. I think we got lower low to go, and Magic Fibo is a logical target for it, right around 60. All right. So again, if you're buying the bounce short term, take aggressive profits because I suspect this will fizzle and give us another thrust lower. All right. Now, jump into a little crypto. Bitcoin is pretty much confirmed. How about that call? What did I say for weeks and weeks and weeks and weeks, Emil? If we break 80, where are we going? 74, 75. Huh. Wow. Not too shabby. Talk about price action. Epitome of price action. Now be careful on this low. What I think is unfolding is I'm looking to see if this is the low or we go a little bit lower. But if this holds, we're going to start a multi-month correction back to the upside. So I'm looking for something of this nature where we make a correction that lasts for months. And we get a 3-waver in this. And we push back toward the recent high to low. We should make somewhere in that ballpark of, and let me do that with a fresh one. Take this out since we hit these new lows. And from that high to this low, we're looking at Mr. Bitcoin to make a 3-wave move that's going to get us back somewhere around that 100 to 115 area. All right. Maybe we fall shy and only reach 90, but I think we got some major upside and a corrective action and the bigger picture from the high to the low. And we got to drag this over here. Let me fix that because this was the low. Now this is the low. Use my control key and make sure I got the low. So look where the 618 is, about 106. So from the all-time high down to this new low, 618 is about 106 area. So what I think is unfolding, that this is the first obvious sign that this is crypto winter beginning. And now we need a 3-wave correction that puts us somewhere around that 100 to 115-ish target. All right, focusing on about 106. So Harold, if we end up in the next several months, I don't think this is going to happen in a week or two. I'm not convinced it might happen in 2 months. Probably push us out somewhere near June. So let me take that off for a second, condense this and back it up so we can go out to this area. So I would look for some sort of bounce coming that we rally maybe into the 80s or so and take several weeks to a few months. And then we pull back down. And then we make that last move into that 100, 106. So I'm going to split the difference, make a 618 retracement up there. That could push us out to potentially June. All right. So by breaking the low, kind of takes away our all-time highs. And the only way this changes is we got to get above this green box and start pushing above, say, 115. Then it sets the tone. We're going to all-time highs. So until we go way up here, then we can look at all-time highs. Otherwise, I'm expecting a lower high, lower low. And this is kind of the bigger picture plan that we're going to get a several month, 1 to 4, 1 to 5 months, maybe out to summertime, and a 3-wave correction. Then we're going to get a 5-wave down and bring us down to 50,000 to 30,000. That's going to be the low. So why is that important? Back in 2022, when Bitcoin was over here below 20,000, made bold statements, not predictions, but bold statements. There's a huge buying opportunity. Bitcoin is projected to go to about 150. We got to 126. From below 20 to 126, that's a hell of a run. And based on its latest lower low price action, we're not going to go any higher than this year. All right. So, but I definitely expect a big correction coming over the next several months into maybe summer. And then from summer going into around October-ish would be where we get this 50,000 or lower. Now, is it timing is important? No. You hear Bitcoin is below 50,000, that's the 20,000 parameter you should be buying for the next cycle. Any questions? So, could we take advantage of some upside? Buy a little leveraged BTXU, was BitX and BitU. Can we buy some of those and look for this bounce over the next few months? Certainly could. I definitely think we're going to rally before we go plummeting down. Got it? So this looks like a 5-wave. Now we need our 3-wave correction followed by the next 5-wave down. So is this off the table for now? Yes, till price proves otherwise. And how do you prove otherwise? We got to get above this 115 area. Then it sets the tone. We're going all-time high. So I won't say it's impossible. Bet your life it's not going to all-time highs this go around. That's it. It's done, folks. That's it. That's all. Stick a fork in it. Anything is possible, but this is extremely low probability now because of that recent price action. So in closing on Bitcoin, the crypto winter has taken the lead. Crypto summer is over and we're in the crypto winter. But after this move, it went right to where we said it would go and bouncing. Let's see if this is the low and we get that 3-wave correction over the next several months, probably May or June, 3-wave. Then we get toward the end of the year, going in October. So a couple of stories here. I don't care if we get down to 50 and lower next week, next month, next year. When Bitcoin hits 50,000 and lower, that is your buying opportunity. Ideally, the perfect scenario would be for Mr. Bitcoin to hit down in here somewhere in late 2026, October-ish, November, something like that. So I don't care if it's October, November, or even December. If we're at 50,000 and lower, that is a beautiful time to buy for Bitcoin's next run, which will start in before then, but the next halving is in 2028. But I'm looking for this to bottom down in this area in late 26 and then start grinding higher in toward 28, then 12 to 18 month run into the hundreds of thousands, this next run. Any questions? So again, the likelihood we're going to break out to new highs is now low probability. the likelihood will retrace toward 100 to 115 zone and fail and then go lower by the end of the year is much higher. But over the next several months, I'm looking for this thing to grind higher. Then when it gets there, anything I have Bitcoin related that I didn't already take care of, I'm looking for this to go much lower into that 50 to 30,000 range. So anything below 50,000 is a major buy. Pushing toward 30, extremely major buy. And you'll buy and hold it for 3 years until we go from late 26 to late 29 is the plan for Bitcoin to then go ripping into the hundreds of thousands, meaning 200,000 and higher. Okay? All right. We'll get specific targets later like we did this time. And even though it appears we fell shy, it was not a bad investment from 20,000 to 126,000. That's about as good as it gets. So any questions? Drill down. Is this over? Yes, very much so. Are we going to get a big correction? Thousands of dollars in a correction? Yes. Is this the low? Probably. This last move looks like it's complete. Now we need to see a higher low develop. And let's see if we get it. All right. So Mr. Tucson, what do we got? From the low, I'm going to move this up a little bit, go to like a 4 hour to give me a little bit more separation. And let me push this up. Push that up, stretch it out. And from the recent low to the recent high, we're testing the 618786 zone. So I'm going to watch this area like a hawk. Do we hold this as support and set the bounce? Or do we need maybe one more push? But I still think we're going to get a big retracement out of this. Pay me now, pay me later. We are due for an upwards correction. So go over here, change that to green. This is a major support zone, so I even darken it some. Major support zone. Is this the beginning of that? Probably. What if we don't and we go lower? Then we're still going to get a three-wave correction out of that. And what are we just basically looking for? All-time highs of 126. I'll bring this down in perspective. From our all-time high over here, 126, which is way up there. All-time high, the current low, we're going to get a 618 type of retracement out of that. Somewhere between 100 and 115,000. That's the 0.5 up to the 618 right now. That is the plan. And again, not next couple of days or a week or two to get up here. I think it's going to take several months to get up there, like sometime in June, July, something like that. Amen. So push it out a little further, somewhere in that June, July timeframe. Then what? Look for the next big thrust as we move from June, July into the end of the year, October, November-ish, into our nibble zone of 50,000 / 30,000. I don't think Bitcoin is going to break below 25,000. I said that a few years ago, that this is probably the last time we'll ever see $25,000 Bitcoin when we're below 20,000. And I still hold to it. I do think we're going to dip to 50 / 30, 50 or 50. My plan is when I get 50,000 and lower, that's when you start buying, whether you buy Bitcoin in a broker or you buy some of the leverage product or just some of the ETFs. There's many ways to play it. I do think once we're down here, we're due to go ripping extremely higher. But from late 26, and we start nibbling to 2029, 12 to 18 months post halving of the 2028 halving cycle, which is way over here. Gotta shrink this up and pull that back. Halving's next April-ish, April, May. That's the plan. So here we go. Harold, this is probably the low. Probably. And we're going to start grinding over the next several months to then get another push in toward the end of the year. That's a little, based on that, I got to redraw that. So we grind up, and then toward the end of the year, we start getting into, that's a little too narrow. So closer to that 227 range. So we should start breaking back down into the zone somewhere in late 26, maybe close to 27. Then we're going to reverse and start grinding higher into the 2028 halving. Then we're going to go ripping off the chart into, so from this buy in late 26 low up to the new highs, all-time highs in late 2029. Got it? 3-year. So we're looking for a 3-year investment. 3-year. Starting October-ish till 2029. So maybe October 26th, October 29. Got it? All righty. Ethereum's in the same boat. It did the same type of breakdown. And let me zoom this in, get the current price action. When we broke below that trend line and then retested it, kind of set the tone, we're going to make some new lows. We got it. So I'm expecting this to do a similar type move as Bitcoin over the next several months. So you take the all-time high up here. Let me move some of these out of the picture. Remove. I'm just going to clean this up a second. And what we're looking for is 2.2 from the all-time high up here, which I got to move it. That's not quite it. To the low. Fix that with that one. Right? From the high to the low, we would expect over the next several months, push us out to right June, July, that we can get a 3-wave correction. And this thing is going to make a retracement toward that 38 to 43. So I still think it'll probably push toward 4,000. If it's a little bit shy, 3,500, 3,600. So we get a 50% retracement right around 3,600. We get a 618. That's pushing that 5,000, about 4,000, excuse me. And if we push towards 786, about 43. But a 3-wave correction followed by a big push lower into late 2026. But the all-time highs is off the table until otherwise proven. What would it take for us to flip the script and start looking? We need to get above that 4,500 area. Not quite at all-time highs, but we need this to break above this resistance zone to set the tone. We can make new all-time highs. And that is a low probability now based on this breaking even lower. Amen? Any questions? So be careful to the downside. I would not be heavily shorting this, thinking it's going way down. Eventually, yes, but we need to see after this very big move, 3-wave correction, followed by the next push lower in a 5-wave, And how low do we go? We shall see. But the plan is to rally back toward 35, 4,000-ish range before failing. And when it does, I'm going to unload the rest of my ETHU and some of those other products that I bought, took profits, bought, took profits, bought, took profits. So I'm about to nibble again on some of these lows and look for this thing to run back toward 4,000 is kind of the target, 3,500, 4,000. And if that happens, we're looking at ETHU just for a comparison from that low up to about 4,000 would put us somewhere around an 85-ish% gain. So ETHU should be somewhere in the neighborhood of 160, 170% gain. So if we come off of these lows and we look for a 160% gain, it would put us about 60-ish, 60 plus dollars, and we're buying in the low 20s, so maybe another triple out of that. All righty, any questions? So the likelihood we go ripping to these new highs, very low because of recent price action. Amen? All righty. But I'm a big proponent when we do bottom in late 2026, like we did over here in 2022, which was before this was out. But when we bottom in 2022 and Ethereum went from below 1,000 up to it's 5,000, just shy, 4,000 plus. And this next correction, rinse and repeat, just like Bitcoin, we're expecting as we get into late 26, we'll bottom out. And then wherever this is, if it's $5, $10, whatever it is, I'm going to look to start adding some of these and look for this thing to go ripping higher as we go from late 26 into 2029. And we'll probably do peaks and troughs. So it's a 3-year investment on Ethereum, but during these big runs and you double, triple, quadruple your money, wasn't that a beautiful call, Harold, when we said, yep, we should at least go to this 160, 197 area? Beautiful. Took profits. Now we're way down here. I'm looking for another bounce, but it's going to be muted somewhere between this recent high and this recent low. 618 retracement. Maybe we get near 100. That's most I think we'd get, somewhere in 100, 130. I don't think we're going breaking out, but from the recent high to low, get a 618 retracement out of that, and we probably won't even get that high. So if we get to 100, time to unload. And based on what we just said, maybe it's more like the $60, $70 range because it's going to underperform based on that big push. That's what 2x leverage does. When it goes against you, it goes against you in a big way. When it goes with you, that's why a lot of times you'll see the underlying break all-time highs and the leverage after a big sell-off, the leverage product doesn't reach all-time highs. But I still would think if Ethereum were to go ripping higher, which is, it's got to take a lot, then this thing would struggle to go breaking out above that 200 now that we made some new lows. I digress, but I think you get the point. So in closing, circle the wagons. I think the dollar index is likely going to break down. That is the plan. It's rallied. It's tested that big resistance zone. The likelihood, as long as we stay below this swing point, we expect another thrust lower. As we thrust lower, the pound dollar, euro dollar should go higher. And that's the plan. Amen? As long as we stay below this swing point, basically at 98 level, as long as we stay below that, we start breaking back down, we should go down to the low 90s, maybe 93, 92 bubble zone. So that's the plan. We need A, 1, 2, 3, 4, 5. Then we'll look for another bounce. So again, the euro and pound should continue its journey higher, up 500 plus points, took profits, still expecting us to grind further as the dollar breaks down. And the euro, same thing. We took some profits at 400, told you to take profits. We pulled back, likely going to go bouncing to make new highs as the dollar breaks down further. And our markets, again, would not be surprised to see these break down further. This overlapping chopping action is not conducive to breaking out just yet, even though I think this is a foregone conclusion. We're going to go higher bubble hunting, but we probably need a bigger correction first. NASDAQ, ditto. Still more bearish because we never broke all-time highs since last October, and we came close but failed. And even this latest bounce is fizzling. So the likelihood it's going to go lower is much higher probability. And I'd like to see a new swing point low come down to Magic Fibo. If that doesn't hold, then down here in the lower 23,000, maybe upper 22,000. But all roads, ladies and gentlemen, know we come down here to bounce to go bubble hunting, or we come down further and make actually a new low below that guy, and we come to the upper 23s, mid 23s, lower 23s, maybe upper 22s, to then bounce. But all roads lead to us going up, making new highs, targeting that 26.7 / 27,000 plus. Got it? IWM, still think we probably need another flush down before we go up to 290,300, but I do think we're going to get to all of these bubble targets. We just probably need the correction first. And the deeper the correction, the more I salivate for the big run in. All righty. And then last but not least, the Nikkei. It too looks like it needs one more thrust lower. And if the Nikkei does it, it's kind of zooming in for you. If this Nikkei does it, Harold, and breaks down, goes toward 50 and doesn't hold this support zone around 50, and we push toward this 48 area, if we get this to push down in here, it's going to pull ES down, it's going to pull NASDAQ down, it's going to pull Russell down, and probably even take Bitcoin and Ethereum a little bit further. But I'm very cautious about those because I'm looking for a three-wave correction sooner than later, but no later than later. Do we get just a simple pullback to go breaking out? And even with this one, there is a blow-off bubble up here. So around that 56 to 60,000 range. I do think we're going to reach this, even if we pull back here to bounce. All roads lead to this breaking out up there. Do we dip, make a new swing point low? Then we go higher. Do we come down to Magic Fibo to get higher? But all roads lead to higher before we're done. And last but not least, you come over to this and you look at, we don't have a whole lot of, we got some Magnificent Seven reporting this week. To Wednesday and Thursday, Amazon and was it Microsoft? So be careful with that. Other than that, there's no real catalyst out there. So what do we know? We're going to get blow off top. Again, we talked about this. When you're 200 moving average, how many companies in the S&P 500 above the 200? When this thing starts pushing 80 and 90%, at least 80 and higher, that's when it's time for a blow off top and a big correction. I don't mean the one I think's unfolding potentially now, but after we get to the blow off bubble top, big correction. And when this baby is at 80 or higher, look out below. When the Russell 80 or higher, look out below. When the Dow and the NASDAQ 80 or higher, look out below, even though I think we're correcting lower first to get the blow off top. That's when I'm going to give you some major insight. When we start to look at NASDAQ at 80% or higher, how many companies above? Dow 80 or above, which we're closer to this one, probably more like 90. And then the main one is going to be S&P at 80 and 90. Anything above 80, pushing 90, we don't stay up there, as you well know. That's when we're going to get the much bigger, and might even be the Elizabeth, I'm coming to join you, honey. So with that, good luck. God bless you. May the pips be with you. Remind you, this software does run in the MetaTrader 4 platform and NinjaTrader 8. And we got all the goodies in here. So Meta expecting to come back toward the Magic Fibo, refill this little gap that we gapped up on. So the daily's turning over, looking for that to go down. And remember, you got your drawing tools in here. So you go on the drawing tool, Fibonacci retracement. So you click on the low, you click on the high. It's got all our magical levels in there. 618, 786. Got your extensions, got everything you need, and then some. It's like Prego. So what is Meta likely to do in the coming days? Fill the gap, bounce off the Magic Fibo. If not, and we get the much bigger, broader market correction, then maybe we get a daily cycle down and Meta goes lower and METU goes lower, and I look to add to my position. So you know I already have some METU I bought on the low down here. So Harold, what happens if we get the bigger, broader market correction now? And this baby comes down into the low 20s. I'm just going to load the boat and add that much more for the much bigger surge to come on Meta. And remember, the target up here on Meta is way off the chart up here at that 11 to 1300. So this area up here is my target. Might take a year, maybe two, but the target zone is at 1100 to 1300 zone. And even with a bigger dip, got to rip that much longer. Again, not expecting this thing to go ripping up 11, 1300 next couple of months. It'll probably take a year or two. And with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor instructor, and join us again tomorrow. That's it. That's all.